The following is a presentation of TFNN. Live at TFNN, the Money Masters. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, the Money Masters.
Good day, Money Masters and Treasure Hunters. Welcome to the August 6th, wonderful Wednesday edition of the Money Masters Show. I'm your host, Steve Rhodes, author of Mastering Probability, the daily newsletter service that is the intelligence for creating financial freedom. Hope everyone out there is off to a great start of their day. Let's make sure that both you and I, that we do everything that we can do. I mean, everything within our power to make sure that we have an extraordinary Wednesday out there. I'll do everything I can during the next hour to help you navigate through the markets. We'll utilize tools like our lightning bolt pattern, our A to B equals CD pattern. We'll look at Fibonacci expansions and retracements. Of course, the combination of those will make up the Gertley and butterfly patterns. We'll look at Japanese candlesticks. We'll look at the Rhodes momentum trading signals that are out there. And, of course, this is a interactive show. That means you can give me a call at 877-927-6648. You can call me internationally at 727-445-1044. Would love to field your call, and we'll both, like Tom likes to say, I love this, bisect and dissect whatever it is that you're taking a look at. So it is Wonderful Wednesday. This is Tiger Financial News Network. Thanks so much for joining us, folks, and welcome to the show. Right now we've got Dow. The Dow is up 18 points, trading out at 16,446. We got a counter-trend rally that is underway out here. We'll see, and then we'll go identify the areas where the rug could be pulled from right out from underneath us. We've got the S&P up a point, NASDAQ up a couple of points, Russell 2000 up 3. Russell 2000 has been the strongest here over the past couple of trading sessions. What does that mean? I don't know, but we'll go take a look at the chart patterns and let the chart patterns tell us what it may mean out there. Gold having a heck of a morning out here. Gold is up $22. It's trading out at $13.07. Silver's up 17 cents, so it's up, but not up anywhere near as much. In fact, half as much from a percentage-wise as Goldilocks. Light sweet crude is up 44 pennies. Didn't take a look at the international markets here, but right now you've got the DAX is well off of its session lows out there. Again, it looks like a counter-trend rally going on out there. Right now, the DAX is off 81 points. Trade at 91.08. FTSE down 55. Trade at 66.27 out here. In fact, let's go take a look and see what the international markets here look like. Here is the DAX. Let me go ahead and update the chart. Let me make sure I've got all of the latest data out here. And what the DAX shows is the DAX has broken through its rising price channel that takes you back into 2011. So you've got a very strong down move that is underway out here. Now, this little break of the channel line back here in the time period of June of 2012, I don't really consider that so much a break. These points that were out here were just helping to really identify the rising price channel, because in this case here, all it was trying to identify is the largest number of co-located. That means it doesn't matter whether the body is an open or a close out there. We're just trying to identify the largest number of either opens or closes, the bodies of those candles, where they come together in order to be able to find and define that rising price channel. Now it's somewhere, and you can see that once we defined that back here in 2012, price came back and tested it back in April of 2013, came back and tested it back in June of 2013, in July of 2013, the market went topside. Well, in the case of the DAX, it's now broken through that rising price channel. What it hasn't done here, it hasn't tried to bounce to get all the way up into it to confirm that the break to the downside is real out here. What it has done, all this selling pressure has moved the daily chart inside the DAX in that extreme oversold condition. And so the real key here, when you take a look at the DAX, when you take a look at our markets as well, is how does this get dealt with? At this stage here, there's nothing bullish about this candle, nothing bullish at all. So don't let the color green fool you. Don't let the color red fool you as well. You really want to understand your Japanese candlesticks out here, and that candlestick is a nothing. It just means it's trading off of its session lows, trading a little bit higher than the open. That's all that's going on inside of the DAX. If we take a look at the FTSE, let's get some information about the FTSE. Now, the FTSE here is not doing too shabby. What do I mean by that? Well, the FTSE's been trading in a sideways consolidation, a 430-point consolidation. And it made a very bullish pattern. Now, So here's a message from the FTSE. So I'm glad that I pulled this chart up for you. There's nothing more bearish than a failed bullish pattern. Well, in the case of the FTSE, it made one of those textbook 3 drive to a bottom patterns. That formed on July 10th. You didn't exactly get a great confirming message on July 11th, but you certainly did if you combine the 2 candle sessions, July 14th. If we combine July 11th and the 14th versus the down sessions on July 9th and the 10th out there, if we go ahead and combine those two, then the answer is, yeah, you got a reversal signal. Now, price didn't make it all the way back up into the top of the consolidation box, and so that was a little bit disconcerting, especially because it created this little key reversal type session on the trading session of July 25th. But what it did here this morning, or it's doing is what I should say this morning, a close below the 3 drive low. That's July 10th. How about that for a little rhyming out there? The price point is 66.43.62. You're at 66.23. If it closes below that, there's nothing more bearish than a failed, very strong bullish candle signal out here. So you got a couple hours, maybe which I think it closes. We're in daylight savings time. I think it's 11:30, an hour and 15 minutes before you see the close inside the FTSE in the UK out there. But that's the number to really be paying attention to. Okay, if it fails, what does that mean? What it says is that price ought to go down to the bottom of the consolidation and only a break to the upside or downside. Then you get that price move of 430 points. But that's a heck of a consolidation to play just inside that trading box. So that's what's going on inside of the FTSE. Inside of the Nikkei out here, well, the Nikkei, let's get rid of that little box out there. Let's take a look at what the Nikkei's done. The Nikkei is still trading into a rising price channel out here. This is a daily chart out here. We'll see, depending on what it does tonight, early in the morning, whether it breaks to the downside or whether it finds support of its rising price channel. Now, when I say it's the rising price channel, you can see I've only got one touch point. So I don't really know how good that cemented low is inside of the Nikkei. Nonetheless, it's all that I've got to go with as we speak right now, and we can redraw these charts, and we do redraw these charts on a daily basis when we get additional information. If we take a look at the Hang Seng on a weekly basis, Hang Seng still looks pretty positive out here. Let me change this to a daily, see if there's anything out here on a daily that sneaks out at us. And, this is probably enough of a downtrend here to say that today's candle session inside of the Hang Seng was a hammer candle. So that says that the low of this morning's trading session, last night's trading session at 397.41 should be good support out here. But this stock chart still looks pretty good. Looks pretty good to me. Take a look at the, I say the body of prices. The body of the candle is the essence of price out here. But it's worth noting the wicks out here. Take a look at the bears. They're unable to do a whole lot inside of the Hang Seng. Look at those long lower shadows. Whether this is enough a downtrend to create 2 hammer candles or not, I think this one is today. Yesterday's maybe not so much. But today's making that little bit lower low out there. It is. But you can see the bulls are out here defending the Hang Seng. So that's what's going on inside that marketplace. And the Shanghai, let's go ahead and complete this off. It has broken through a very long-term descending price channel out here with a nice wide-ranging bar last month. But let's take a look at a daily chart, see what kind of signals we might see out here. Hey, geez, nothing bearish really about the Shanghai as we take a look at it. Really nothing at all out there. In any event, I know you want to go see what's going on in our market, so let's go do that out here. And what we're going to do is we're going to start with the intraday charts out here. That way you can kind of get a feel for what is really potentially going on out here. As we ended the last hour, I think it's incumbent upon me probably to begin where we ended, and we might do a little bit of recovering out there. So we're gonna start here. We'll take a look at the S&P futures. And then we'll go take a look at the Dow. But we'll look at all 4 of them. Then we'll switch over to the ETFs. And actually what we'll do in the next segment is I want to go ahead and take care of taking a look at the euro. We had Peter from Park City call in yesterday towards the very end segment, and I wasn't able to provide sufficient enough time to go take a look at that. I think he was looking for a spot where the euro might be finding a bottom. So we'll go do that in the next segment. Nonetheless, right now inside the ES Mini, we do have a confirmed bottom, short-term bottom out here, utilizing the 120-minute time frame. Why do I say that? Well, we've got one of Stevie's favorite patterns. Why is it my favorite pattern? Because it's the pattern that is called every single market top out there. It is, and when you use it on an intraday basis, it works as well. And that's where we've got the Stevie Price RMI Rhodes Momentum Indicator signal pattern out here. And so it is absolutely worth noting. So what do we have take place? As I got up this morning, about 5:30 or so, futures started selling off probably about 6:15, maybe something like that. Really started selling up about 6:15 for a good hour or what have you. But what I noticed at the time when futures were moving lower was that they were moving lower with less relative weakness out there. Now that alone, just as price moving higher with less relative strength, that alone doesn't mean that that's where price stops out there. You must use the combination of my opinion. It's really more than my opinion, and it's not touched on anywhere in any book that I know of, just the Stevie book that one of these days I need to write out there because it really puts it all together for you, is that any pattern needs to be confirmed with some type of reversal candle. It's the business of the bulls and bears to go to work each day and to go ahead and build signs for us out there. And that's really what they do. And so with the sign that we saw here during that last 2-hour trading session, it's a 120-minute chart that we're looking at. I can switch over to a 30-minute time frame chart as well. But right now you got a nice little bull sash candle. It says that the bulls are trying to defend that. That's what is in the makings of a short-term bottom out. It could be longer than that. I can't control what the market does in the next several minutes, hours, days. I can only take a look at what is the market signaling to us at this stage. Okay, so we got a little bit of a bottom that has formed. You want to see follow through during this next 2-hour period. Well, we just began that, so that's between now and 12 noon. Lots can happen inside the market. Now, let's assume that the market continues to bounce from here. What does it have to do? First, it's got to overcome this little hurdle out here of some resistance. And this is the S&P futures at about the 1918.25 mark out there. So that's the first thing that it needs to overcome. If it can't do that, that's weak as what is weak? I was going to say weak as molasses. That doesn't even make sense. It would be sticky as molasses out there. Nonetheless, if you can get a higher close, a close above the close from the last 2-hour session, which was out at 1912, it would go a long way to say that, okay, the bounce should be underway to take us into the 1928 to 1930 type level out here inside of the ES Mini. Now, you're trading at 1912, and I was saying this as we got off of the air. 1912, and I'm giving you a target of, let's say, 1928. 16 points. Trust me, if the market moves up 16 points, it's going to confuse the bears, perhaps. It's going to confuse the bulls. It's going to confuse everyone except you for listening here at TFNN. That's a normal area of resistance. What do we have up there? We've got really a multitude of things. Number one, we've got the 50-period exponential moving average. That is a dark red line on my screen that has acted as resistance ever since those highs were made on July 31st. Really, it was July 29th, actually, I believe, right? Yeah. July 29th out there. And we get back from this break, I'll tell you what the other elements of resistance are inside of the S&P futures contract. That way, I can help you to navigate areas of support and resistance and really set your expectations. 877-927-6648. Steve Rhodes, TFNN. We'll be right back.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different future contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a free 2-week trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Flattish market out here right now. Dow's off 4, S&P down 70 cents, NASDAQ Composite up 50 cents, and the Russell 2000 up 2.5. And, I get questions fairly often. People send emails. You're always welcome to reach out, send me an email, Steve at TFNN.com. I try not to make it a hate email, but, I get those every now and then as well out there. But so be it. But you can send me love emails all that you want. Now, I've just the question that has come up here as of recent is, when I do the shows, I'm typically taking a look at the futures contracts. I'm taking a look at the ES Mini, taking a look at the NASDAQ, the Q, and the question was, how come I don't use on an intraday basis the SPY, the Diamond, and so forth? To me, it's all about price discovery, and if I just simply use the ETF out here, I'm missing out on the majority of time out there. And so I want to be able to take a look at the real price discovery inside a market that's going on for 23 and basically 23 and a half hours a day out there. And I don't get the same information. So when I take a look at those patterns, when I take a look at price moving lower with less relative strength, here's the SPY 120-minute chart versus the ES Mini, which I'll flip back to. Now, not that this doesn't provide you with information and patterns out here. Not that I'm suggesting that you go ahead and that you trade the futures, but I am suggesting that it is worthwhile for you to go ahead and get access to that through whether it's your broker, whether it's just simply picking that up and adding it to your platform out there because of that just simple, that wonderful price discovery mechanism that's out here. What can you use the SPY for? Hey, if you're going to use a Chapman wave, if you're going to do the countdown out here, what the SPY is signaling to us, it is looks like it's at a potential, the low that came in here at the market open on that 120-minute time frame would be potential G, that the seventh and final wave out there. Could be a G, could be if it recycled or what have you. If you come back up here, could be a G/C. So anyways, the reason is because it's all about price discovery for me. So I'm going to go back and take a look at that ES Mini and identify for you here what is clear for me with regard to any bounce in the marketplace, what you should be expecting. You see, the whole key about life is to be able to, if you expect something, and it happens, then you should be able to react. You should be able to act at that stage, right? And nothing should confuse you. Because if you were, let's just say you were a person that was interested in trying to take the short side of this marketplace, and you were looking for ideal places to come in and short it. If I were to tell you that 1930 might be the spot, well, 1930 or 1917, that's 13 points higher. You might even start second-guessing yourself at that stage. It's okay to do that, but if I told you that as the market was cruising lower at 7:30, 8 o'clock this morning, and I said, here's probably your better spot to go ahead and take a short, you would have been saying, hey, that's great, I'm going to go ahead and sell into a little bit of strength out there. So at this stage, we've got a bottoming pattern out here inside of a potential bottoming pattern on the 2-hour chart here for the ES Mini, and it says it ought to find some resistance at 1927 to 1930. What else is up there? Well, you've got your market profile on the 120-minute time frame at the 1931-ish area. You've got a shooting star candle that took place at 6 o'clock in the morning. That was yesterday. That price point out here is at about the 1932 level. So we've got a bunch of resistance out here inside of the ES Mini. That way, I have set up your expectation. Does that mean that price stops there? Of course not. But just want to be able to, set up an expectation. And you've got to just simply pay attention. You've got to, as my man Z says, you've just simply got to focus on the charts. And just try to utilize the tools that you've got. Keep it simple. And hey, I got another Tiger sent me a quick little post here, and it said, "Weak as a day-old baby." Yes. And, of course, slow as molasses. We got the slow as molasses. The weak thing, though, that was one that was struggling with. Anyway, that's what's going on inside the ES Mini. Let's go take a look at the Dow out here. And this is so that I can help you to navigate what's going on in the market and explain to you what's going on and why. And that way it assists you in your trading. So back over to the Dow futures out here. The Dow futures also making a bullish confirmation with a bull sash. Where is it that the Dow futures should be able to bounce to from here? 16,480 is going to be its area of resistance. What do you have out there? You've got a 50-period exponential moving average, so it's not a 50-day because these are periods of 120 minutes out there, and that happens to coincide right with the market profile high on the 120-minute time frame. So 16,480, that's another 90 points up there. All of a sudden, CNBC, Bloomberg, whoever else, everybody else is going to be like, hey, the sky is no longer falling. And that may be true. But what we should expect is that should be an area of resistance inside of the Dow. When I get back, let's go take a look at the Russell. Let's go take a look at the NQ and anything else that you'd like if you give me a call at 877-927-6648. We'll be right back.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow's up 14, S&P up about 2, NASDAQ Composite up 4. So let's spend the next few minutes taking a look at the 120-minute chart here for the Russell and then the NQ. And then we'll switch over and we'll take a look at the Euro and see what we can find out here. Now, inside of the Russell 2000 120-minute chart, that's what we're looking at right now, it actually began forming one of those price RMI divergent bottom patterns back here during the 12 noon session on August the 1st. So that was on Friday. So actually, the Russell 2000 has been acting a bit stronger than the other 3 indices out here as far as selling pressure, because it hasn't really, well, it just pierced. I believe it broke through the low. Let me see. The low during that 12 noon session on August 1st on Friday was 1103.10, got down to 1103.40. No, it never even broke the low from Friday out there. Of course, all that it's really been doing is traveling in this little sideways consolidation box out here. So the Russell 2000, in order to begin to suggest that it wants to move higher, and move higher to where? You'd have to use that dotted line. 1138.20 would be its target area. It's got to clear this bearish engulfing candle. That bearish engulfing candle, that took place in between the noon and 2, the 2 and 14, 12. The 2 and 4 p.m. No, the 12 and 2 p.m. session. Boy, talk about math conversion issues today out here. 1,400 hours. How about that? A little bearish engulfing candle that took place on August the 5th. That says the high out here in the Russell 2000 at 1127.20 is really your significant area of resistance. You get above that, and then 1138 should be the number where it would, where you know, if you were playing an intraday basis, bounce or what have you, you'd want to really start maybe taking your profits, tightening up your stops there. Now, can the markets move higher than all these levels? Absolutely. Yeah, I can't control what they do. Could this be the beginning of a bottom out here? The answer is, yeah, well, of course it can. But let's just go with the levels of resistance that we know that we're dealing with, and we'll deal with any kind of breakouts above that. Should in fact that happen. At this stage, it has to really make it up to those levels. Now let's finish this off and let's take a look at the NQ, because we've got, in essence, a little bit of synergy here with regard to a shorter-term bottom that's trying to be formed. Now, should we have even expected that? The answer is yes. Yesterday's one-day rate of change inside the VIX index out there was greater than 10%. Anytime that you have that, anytime you have a one-day rate of change greater than 10%, you need to expect to see some kind of bounce. Now, that bounce can just simply be intraday out there. I can't control what that bounce is, but I know within 48 hours that that's really what you would expect. So if you knew that going into yesterday as the market closed, and you saw the market that was moving lower today, what was that still telling you? Hey, you got to expect a bounce within the next 48 hours. And at this stage here, I can say, based on the way that the futures have come off of the lows, that's fulfilling that expectation out there. That doesn't mean it's an initiation move. It just means that's really what you should expect out here. Now, in the case of the NASDAQ did not form a bullish reversal signal, which is really a piece of the ingredient to the Stevie recipe out here. Without that, you got nothing. It's like trying to cook without what? Without sugar and salt, I suppose, or without Kerrygold butter, or without chocolate in a chocolate souffle. You don't want to do that. Well, in this case here, we don't really have a bullish reversal signal inside of the NQ. Does that mean that it can't bounce from here? No. It just means that you don't have that pièce de résistance out there. But resistance is about 38.90 when we take a look at the NASDAQ. What do we have up there? We've got that 50-day exponential, did I say 50-day? Shame on me, 50-period exponential moving average out there, along with the market profile high. So expect 38.90 to be some pretty strong resistance inside of the NASDAQ. Okay, so we got that out of the way. That way I've set your expectations with regard to where price can get to, and that way as price, if in fact price gets up there, if you're bearish, you don't have to close out your trade. Just watch what happens if price were to close above those levels. Then that says, hey, we've got a stronger bounce that is underway, a stronger bounce that you would want to sell into, and if you're looking to get short, you can utilize those levels. Remember, that's on the 120-minute time frame charts out there, but that's the best way for me to help you at least navigate what is going on inside of the markets. Now, had a call late yesterday to take a look at the euro, and I didn't get a lot of time, and I didn't spend any more time on it since then. So this is going to be a fresh take of what's going on inside the euro out here. And as I take a look at it, we're going to use a multitude of charts out here. The first chart that I want to put up here, because it's always good to understand multiple perspectives. What's going on the monthly chart? What's going on a weekly chart? What's going on a daily chart? What's going on a 120-minute chart out there? If you're trading a vehicle, you want to know what's going on around the corner at all possible places out there to assist you in your trading. Well, here's the monthly chart for the euro out here. And in the monthly chart for the euro, the black diagonal line that we see coming from upper left, middle left to lower right out here, that's a trend line. And what we can see inside of the euro, it has not broken its trend line to the upside. It attempted to do so. And what I used as my trend line was the high from July 2008. That's up at the 160 level. And then I also used the high from May 31st, 2011. And the break here, the slight break in April 2014, is a small amount of body over the trend line. That didn't really do it. And then the very next trading session was a key reversal area. So the larger term trend with inside the euro, U.S. dollar is still to the downside. Now, the red lines out here, they are the old channel lines that I have drawn in. I don't know if there's anything newer. I can take a quick test and see here if there's anything newer to draw, it would look like that. So that has some potential to draw that in. I'm not going to go destroy this chart here just yet. I'll do that, in some off hours out here. Somebody just delete that. But what we know right now is there's no question on a monthly basis that the euro has found resistance up at its most recent highs. Okay, so that's what we know that's going on there. Number two, if we take a look at a weekly chart out here, this weekly chart has the primary trading range boundary lines. Those are the horizontal levels of support and resistance. And right now, what I would say is that the euro has found support at the lower boundary of its primary trading range boundary number. That happens to be 1.3359. You're trading 1.3355 right now. So this may be some good support on a weekly basis out here. And so that's a level of horizontal support. That's what the weekly chart is suggesting. If we take a look at the, now let's switch over to the daily chart. And as I take a look at the daily chart out here, what I'm going to do, I'm not going to go ahead and get rid of that. If we take a look at the daily chart, what we know is that there's a pattern, an A to B equals CD pattern to the downside that has formed. And that A to B, just the 1-to-1 alone, because the B point on this is the low from June the 5th out here. That low, by the way, is 135.01. That low, because we're trading below that, says it's got a price projection here of 1.3208. And I would say on a daily chart out here, until we see some kind of bullish reversal signal, that's what you would expect. Now, we have to get a little cautious out here. Why do you need to get cautious? Because when we take a look at the euro, it's truly been traveling in the oversold condition of its 14-period relative strength indicator out there. And when you do that, your expectation is, if you're bearish, what you want to see the market do is just kind of move sideways, just work up some of that, just digest some of that selling that's out there. But at any point in time, you could see some kind of a snapback. Doesn't take away from the A to B equals CD to the downside, just something that you want to pay attention to. Do we have a bullish reversal signal as we speak right now? The answer is no. If we take a look at retracement levels off of various swing points out here, I'd come and take a look. My eye goes right to the lows from July of 2013. So let's take the low from July of 2013. Let's go up to the A point, which is the high from May 8th. 2014. What we'll see that takes place at that 1-to-1 A to B equals CD is a 0.618 retracement. That would actually be a 0.618 potential 0.618 Gartley buy pattern. What does that look like? I can draw that pattern in advance, and that way, if you were looking to go long the euro, that's really the area where you would be focused on, is right around that level. You have a 1-to-1 A to B equals CD. The downside, you've got a you've got a 0.618 retracement. See this 2.5 level? That's the expansion of the B to C leg out there. What I would say, you'd take a look at the range here. I would take a look at the 2.618 expansion. And Mark was using a number of different Fibonacci expansions and so forth. So I would say the range for where the euro, U.S. dollar, ought to move down to until we see some kind of bullish reversal signal is going to be somewhere around the 1.318 type area. That's your 2.6 minute expansion of your B to C swing points into the 1.322-ish type range, 1.3208 type range out there. And to B, that's what the daily chart is suggesting to us. Now, let's go ahead and switch over to a 120-minute time frame chart. And in order for me to do that, I'm going to have to switch over into the futures contract out here. I mean, I don't have to, but I'm going to at this stage because it's going to have the Rhodes Momentum Trading Indicator signals on here as well. So that'll help me to navigate what else might be going on because, what as a trader, you want to understand what's going on all the different time frame, right? So I'm going to just simply come over here to the 6E as the futures contract. Now, as I take a look at this, let me try to pull this back here. Is there any kind of reversal signal that we see here? And on the 120-minute time frame, the answer is no. you would see some potential kind of reversal out here on the 120-minute time frame if you were to see the euro close above this little bear sash candle that took place at 6 a.m. this morning. The high of that is 1.3377. That's also where you happen to have the market profile resistance high. We haven't seen a close above a market profile resistance high in quite some time since the beginning of August here inside of the euro. So that would be your first indication of maybe something that might be going on. But as you can see, we're in the red zone here right now. And if you're trading this for the longer haul out there, I think the parameters, I know that the parameters that I've given you here on this daily chart are the ones that I would be taking a look at. So that was the euro US dollar currency pair. Hey, as long as I'm in currency pairs, let's go take a look at the euro Japanese yen. Let's go see what it is doing. I believe that came back to the area that it had broken out from. Let's go see what, in fact, it actually did. That's going to be the 120-minute time frame chart, right? Yeah, okay. So if we take a look here at the euro-Japanese yen, this is really one of our favorite currency pairs because it tracks the U.S. stock market better than anything else here. This had formed a little Gartley buy pattern, or Gartley sell pattern, I should say, on the trading session of about 7 in the morning on August the 1st. Now, if you're watching, let me go ahead and get rid of a couple things out here. We'll just draw these back in. There we go. So what are we paying attention to? Well, the euro-Japanese yen had been traveling in a descending price channel, and it broke out of that. There was some conviction out here at about 9 o'clock in the morning on July 30th. And what we have seen now, we've seen a little, I'll have to go back and take a look at the daily chart, but what I want to show you is the pattern here, because we were looking at gold during the first hour. We're taking a look at how that's broken through a trend line, and how it just seems naturally that this is what occurs here. Even though the euro-Japanese yen broke out of this, look at how price came back right now and is testing this area, and it's rejected that level out there. So that's important for us to pay attention to, just simply because of its typical interaction that it has with the U.S. stock market. Now, I don't want to confuse you or anything like that. I just wanted to check in on that currency pair. At this stage, though, you can see that price had come back to an area where it had broken out of, but it's also very, very oversold. So the bounce that we're seeing here right now is nothing more than an oversold bounce, in my opinion. That would change its tune if you can get above this long-ranging bar to the downside that took place at 7 o'clock this morning. That's out at need to close above 136.91 out there. Again, we take everything just simply one step at a time, one moment at a time. So I mentioned Goldilocks. Let's go back and take a look at gold out here. Here's that 120-minute time frame chart. Gold, wide-ranging bars. Markets don't typically end on wide-ranging bars, and that's what we're seeing take place here in gold. As I mentioned when we were taking a look at that wide-ranging bar, what we noticed was that on the 120-minute time frame, gold had gotten up into the overbought zone, and I said it's likely that we're going to see gold start to move sideways to pull back in order to work off that condition. And that's really what it is that we're seeing here as we speak right now. Now, the best thing, the most bullish thing, of course, bulls probably don't want to hear this. The most bullish thing for gold to do is to come back, test this descending price channel, reject it, and then begin to move higher out there, just like we just were looking at inside of the euro-Japanese yen out there. So at this stage, gold has, in essence, made the 1 to 1.618, A to B equals CD. It's made 100% of a move by getting back to the swing point 8 o'clock in the morning on July 29th. And how gold responds during the next several hours, 8 to 10 hours or so, will be important to help us identify whether this is a real break or not. Silver not having the same type of morning that gold is. Let me see if I can find, let's go take a look. Let me put this on the Rhodes Momentum 120-minute time frame chart out here. Give me a moment to try to pull that up, and I'll switch over there. I'll do that when we get back from this breakout here. This is the 120-minute chart for silver. And all it's really done is run into its resistance level of its market profile high right around the $20.06 area. Right now, we've got the Dow. It is trading out at 16,438. That's up a whole 9 points. That's right.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Dow's up 22. S&P is up a couple of points right now. You got the Nasdaq up 7. So hopefully you caught the opening of this. The shows today, I think, were just as important as most other days out there. But we utilize a number of the Rhodes Momentum trading signals out here to help us identify what exactly is going on in the markets, areas for us to be watching for levels of resistance and what the market might do. And that really helps bulls and bears because, this is just nothing more than a technical chart analysis out here. And that's why we take a look at, that's why I specifically take a look at what's going on in a monthly, weekly, daily, and intraday time period to help each of you because of the different types of funds that you've got to navigate through, because you're going to get a different message from each of the different charts. Now, in this case here, we happen to be having messages, especially when it comes to the Dow and the New York Stock Exchange. And the messages are not very good, because the message on the monthly chart, the damage that was done on July 31st, is unequivocally a same type of top. From 2000, 2007, 1987, 1929, all the major market tops that are out there. And so we have to, it needs follow through. It needs additional work in the ensuing months. But it is something that you just absolutely must pay attention to. Whereas on the 120-minute time frame charts out here, we've got that nice price RMI signal and that bear sash candle. That's the importance of not just utilizing patterns, but utilizing candle signals to let the market's communicating to us. That's the coolest thing. The coolest thing about taking a look at a stock chart is the market is always communicating to us. And as long as we're willing to accept that communication and be as objective as we can, it is just simply so helpful. So Dow futures are at 16,405, way off their session lows from this morning. But our expectation, yours and mine, are that we really won't know anything until we see what happens at about 16,480, another 80 points higher. But at that stage, it's going to feel like all the selling is over. And what you and I know is that's really where the bears are very likely camping out, where the resistance is. Do you close above that? And then you're looking at a really healthy bounce, maybe up to the 16,731 level. But right now, we got to go with what the information is that we have out there. Hey, don't forget the programming. Check-in time here at the Hotel California now. It's at 8 a.m. each and every day. So we've got 10 hours of live programming for you. That way, as the market is changing, each of us, we don't hesitate at all to go ahead and recall the market based on the information at hand out there. Jumping right now, you got Jazz Pharmaceuticals, JAZZ. Boy, talk about a nice key reversal session out here. That's trading up $10. Trading out at 145.93 out here. This is, let's see what kind of volume behind the move. So we've got a key reversal session coming from a relatively strong over from, the RSI yesterday down about the 37 level. That gets us pretty close to an oversold type of condition. So today will qualify as a key reversal session out here. And there were a couple of signs of, you got a small little sign of strength that took place inside the Jazzy one on May 27th. What does the Jazzy one need to do in order to break its downtrend? I'd say just use something simple. Use a trend line. Come back to the high out here from February 25th, 2014, and just simply, oops, that didn't work, did it? Let me draw that trend line one more time, see if I can get that to, I don't know if I can get that to hold. What did I do wrong out there? It was me that did it, that's for sure. There we go. So there's your trend. There's your trendish type line. I think I did a pretty horrible job. Let me pull this back, see if there's any higher highs. In essence, it's that trend line that the Jazzy one needs to break before it changes its little downtrend that's in place right here. So, folks, thanks so much for joining me. If you're off to start your day, have a wonderful Wednesday. Stay tuned. Our man Basil Chapman is up next. Time to go wax the surfboard and go for a few rip curls out there. Have a great trading session, great day. Look forward to seeing you tomorrow. Take care now.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.